At current valuations, 10,000 Bitcoin represents staggering wealth. It is the amount of capital required to purchase a custom luxury yacht like this one, fully crewed and outfitted for the open ocean. This same sum could be used to acquire a private island, complete with a secluded villa and miles of protected coastline. On a larger scale, this wealth translates into prime commercial real estate, including entire blocks of modern glass skyscrapers in a major city center. Yet, the first time this exact amount was ever spent, it wasn't used for a yacht, an island, or a skyscraper. In May 2010, it was traded for 2 standard delivery pizzas. Looking back from today's record high prices, the transaction looks like a massive financial blunder. To understand why it happened, we have to look at the state of the Bitcoin network when it was still just an obscure experiment. In 2010, Bitcoin was virtually unknown to the public. It existed primarily as a playground for early cryptographers and hobbyist programmers who mined the coins on their personal laptops. This diagram illustrates the barrier early developers faced. A digital currency is essentially useless if it cannot be traded for a physical object. Because no one had ever actually bought anything with it, Bitcoin had no established exchange rate. It was trapped in a digital vacuum, with no connection to the real-world economy. To prove it was more than just a mathematical novelty, the software needed a physical anchor. It needed to show it could actually settle a debt for a tangible good. On May 18, 2010, a programmer named Laszlo Huniats posted on the Bitcoin Talk forum, offering 10,000 Bitcoin to anyone who would order 2 large pizzas to be delivered to his house. At the time, those coins were essentially just strings of code with no agreed-upon monetary value. Laszlo asked a stranger to spend their own money for his meal, in exchange for a digital token that might remain worthless. The request was complicated by a major hurdle. No pizza restaurant on the planet was equipped to accept digital tokens. There were no payment processors, there were no apps, and no corporate infrastructure for cryptocurrency. This lack of support meant the community had to engineer a manual workaround to facilitate the very first trade. Laszlo's post acted as an open bounty, challenging the community to build the first functional bridge between a digital ledger and the physical world. This diagram shows the 3-party proxy system required for the trade. The restaurant wouldn't take coins, so they needed an intermediary. First, a UK user accepted the deal. Laszlo transferred the 10,000 coins to this user's digital wallet. Next, the UK proxy called a Florida Papa John's, paying for the order with a standard credit card. He spent $25 of his own money. Finally, the restaurant delivered the pizzas to Laszlo's door, completing the first commercial Bitcoin transaction. When the delivery driver arrived on May 22nd, it marked a historic shift. A cryptographic token had successfully been traded for a physical meal. This manual exchange established the first real-world price for Bitcoin, providing the network with the measurable data it needed to move beyond its experimental phase. Looking back through the lens of modern record highs, it is easy to focus on the hundreds of millions of dollars in lost potential wealth. However, at that early stage, the software needed to prove it could actually settle a debt. If early users simply hoarded their coins for future wealth, the network would have remained a stagnant, closed loop with no practical utility. Currency relies on motion. Without people willing to use it as a medium of exchange for everyday goods, Bitcoin would have never developed the liquidity or the public interest required to grow in value. Laszlo's decision to buy those pizzas created the first measurable data point for the currency's value. He moved Bitcoin out of the realm of pure theory and into the physical economy. This delivery confirmed a decentralized system could manage the entire life cycle of a purchase, from agreement to payment to delivery, without the oversight of a traditional bank. This image of modern trading desks represents the institutional reality of today. We have moved from a single forum post to a world where major financial firms manage multi-billion-dollar portfolios of digital assets. The multi-trillion-dollar market we see now is the direct result of the utility first demonstrated in that Florida living room. The 10,000 Bitcoin pizza provided the functional blueprint for the automated, global financial systems that define the modern crypto economy.